Hello, traders. It's Wednesday, the 14th of March, 2018. Thanks for joining me again for another Trader Bite, where we're looking to read the market, make a plan, execute, and then manage our trades, then review it the next day and rinse and repeat. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, it looks like the markets have popped higher. The high overnight's 2783.50 in the S&P minis. Remember, Monday's low on that balanced day was 2783.75. So we tested just below the low of Monday from below. Yesterday was a bearish engulfing pattern. I don't know if some of you saw my tweet. I was on Benzinga pre-market this morning, and I talked about this. Yesterday was what would traditionally be called a bearish pattern on candlesticks, and we'll talk about that for a second. And so it's the market stance this morning. It looks like money's coming out of some of the safety assets. Gold is down $2.80, 0.21%. Euro is down. 10-year note is just slightly down 2.5 ticks. The Bund is down 4 ticks, and the bonds are unchanged. A reminder again, it is expiration week. We do have expiration on Friday, so we're 2 sessions really, remaining in this expiration cycle. Be careful. A lot of jittery trades are likely, or a lot of jittery action is likely to happen this week as the market's trading, especially the S&P is trading around 2,800. The Nasdaq's pushing new all-time highs. So those are kind of anomalous events. And so overall, the market's looking bullish this morning. We did retest yesterday's low at 2762.50 in the S&P on the pit session. We tested it by a tick. We have a 1-tick failed auction overnight, which is also bullish. The market decided to run up on the European Open. On the calendar this morning, we did get retail sales and PPI. We do get business inventories. Well, did we get business inventories already? It says here 9 o'clock, but that doesn't look right. Business inventory should come out at 10, I think. Eastern, we get crude. We have a slew of ECB speakers. We had a slew of ECB speakers, and they continue to parade this morning. And those are the that and whatever comes out of the White House are the geopolitical and economic news risks. Let's jump right in and take a look at what we expected yesterday, which was completely blown out of the water with the Secretary of State Tillerson's surprise firing by President Trump. That was unexpected. Market didn't like it at all. The expectation yesterday, we were opening near the edge of the range of the prior day, the range high, and so the expectation is we would drop down into 27.95 value high of Monday, and then I'm looking for an impulse and a push to 28.09, 28.10. That was the key plan. I was very confident in that plan. That did not work out at all. In fact, the market ended up making a move out of range right before the open. So even though we finished 15 minutes before that, the market did move up a fair amount before we opened. So the Tillerson news was at 28.04 SOC. The CPI was at 27.83, I want to say. I don't remember. 27.83 maybe. And both those SOCs are scenes of the crime. Both of those were taken out. So what we ended up with is scenario 2 pushing up and then falling back in. But then, the market ended up being nervous and selling off down into 27.60 2, I believe, all the way down to this stock zone here, which was completely unexpected. So both of these scenarios got blown out of the water. That's the effective news, and that's why I have 3 news feeds. I just don't want to be looking at something as if it's a technical failure when actually it's news and the market's jittery. So this is what actually took place in the markets. Incidentally, Convergent Trading launches its website today. I want to make sure everybody knows that. The website is convergenttrading.com or cttraders.com for the short version. It launches today at 3 p.m. You can read about what I'm offering there. What's being offered, everything is moving to Convergent. All my time and effort and creating a community and everything else there. But most importantly, what I want you to know is we're having our first Trader Spotlight event next week, the 21st on Wednesday at 4:30 Eastern. We're going to have Anthony Cordelli he's a longtime trader, CME trader. We're going to just come in and talk about what he has learned interviewing a lot of people on Futures Trader radio show. So you'll see that. If you signed up for notices, you'll get the invite for that. Anyway, this is what we did. We pushed up, retest the Tillerson, fall back in. As soon as we hit the 95 here, I tweeted about this, as soon as we hit the 95 and we attempted to push out of the range, I looked for a short target. The point of control, okay? Look for a bounce, the point of control, look for then the value low. Classic balanced day trading. Value low at 86, okay? 86 and a quarter, that's the next target. And then everything below there is gravy. The prior day, the day before that, I did talk about another short that I was looking at, that I was into. And the target for that was 27.75. We couldn't get it. That was this trade here, the pullback mid short. We just couldn't get that. And we ended up getting it yesterday all the way down to 62.50. There's the overnight low at 62 and a quarter. So we one ticked yesterday's low and we have pushed up. And so far, the point of control is 27.80 and we are stuck at it. So yesterday was completely bearish engulfing. There's the poke above the prior day. There's the poke below the prior day. We have a trend day profile. Notice there's no consensus, no value. We're opening right in the middle of that profile, and we're likely to see turbulence into the open. And the overnight, let's pull up the Convergent overnight chart. The overnight, pretty quiet, pretty dead through the Asian session, until we get to the European Open and we rip up and we hold sideways. Look at this profile, just terrifying kurtosis. A lot of coiling here. We have a double distribution profile in the overnight session with a clear demarcation here at 27.75. That's the area I'm watching this morning. And I'm watching it this morning. That's the area I want to lean against for the long. And I'm watching 83.50. If we breach 83.50 on a pullback, I'm looking to get long and get back into the prior day's range. 2800 would be the next target. If we look at the stock zones above, you'll see 27.75 as a key area. This has been a key area for some time. Yesterday we bounced off of it right here. We're carrying this level, this zone from last week. We bounced off of it and we created a low volume node right there. And we have a low volume node right at it this morning. We're kind of carrying on in an orderly auction. So this morning, if it drops through, I'm looking to stock this area for a push higher, and then start aiming for 2788 and 2800.05 is the extended target. Again, major strike up there at 2800. That's how the overnight session has shaped up. Okay, we have a week low. We have 62.50 from yesterday, 62.25 this morning, and 62.50 again right here before the rally. But very little volume traded there. If this was a triple bottom here with heavy volume, if this profile was fat right here and it cuts off, it would be a concern. But right now, I am looking to the long side. Also, bearish engulfing patterns tend to have a 2/3 probability of finishing higher the next day. Believe it or not, the close of yesterday is likely to be below us today on today's close. So that's where we're at. Let me boot this guy who is throwing profanities out. Boom, gone. See ya. And so what are we looking at for today? Let me clean this up. Flex off. Shift over. I'm looking for a wide open auction this morning. I'm looking for an attempt at 2750. This would be perfect. And then an impulse, okay? An impulse would target my primary target. So my primary trigger is around 2775 or so in that zone. Here are the stock zones again, okay? So I'm looking for a primary trigger in that area. And then I'm looking for the point of control as the first test, 2786. I'm looking for it to pull back, consolidate, and then continue to drift higher. The next area up is likely to be 2794 or so. And that's the target for today. That is the primary scenario for today. That's what I'm shopping for this morning. Okay. The secondary scenario is it pushes up immediately, tangles up at the 89, pulls back into the overnight high, consolidates, and then continues higher into the 94. Again bullish. Okay. Failure to continue to hold the open above the open. We open up in an open auction, pushes up, breaks down, starts to move lower. Then I'm looking to sell short. Target is the stock zone at the low, looking for that triple bottom with the Globex. Poke through 27.55. Now we're up against another major strike, 27.50, and I'm looking for it to bounce back up on the close. Again, how do you use these? What does this mean? Really, just having these plans just forces you to be nimble. The idea is that anything can happen, and when it does, you are not sitting here going, oh, shoot, okay, where do I trade? What do I do? You have it already visualized. You can see what's likely to happen, and it's up to you to just press a button and manage the trade as planned. And then it's very important to rate the trade based on that plan. It's really important to do that. So we come in with 5 plans a day. I go over the 2 or 3 most probable, and then once the market opens, I have those plans in mind. I can see them, and I'm looking to see if the market's tracing my idea of what's likely to happen in case of failure to go lower, in case of failure to go higher, and so on, and what areas I'll play in. But I'm also continuously incorporating what the market is saying right now. And so I'm prepared. My homework is to come in and figure out what areas are key based on support resistance. Those are the stock zones. Convergent traders, Convergent members will get these stock zones. These are the areas that I'm looking to interact with the market. I don't interact with the market outside of these areas because I don't see an edge. They keep me clean and clear when the market's sitting in between. So once they do get into that area, now I'm looking at Bookmap and I'm looking at what is the order flow looking like. All right, so we switch over to Bookmap and we look at what is the depth looking like in those stock zones, into those areas, and what can I lean against? Do I have zippers to lean against? Do I have collisions? What do I have? Is there depth that's going from dark blue to brighter blue to yellow to white, yellow, and turning red as the market's moving into that stock zone? If that's what I see, I'm going to take that chance. I do not look for confirmation. Confirmation means price risk. I look for information risk, meaning I would rather get a better price with less information. So I'm taking risk that the information is not complete. I would rather do that than take price risk by waiting for more information, because price risk is what costs me money. In that by the time I get all the information I need, the price has moved too far away to maintain a good risk profile. And the goal is to flip a coin over and over and over and over. Okay, that's the focus, and that's what we'll be beating the heck out of at Convergent. Anyway, if you have not signed up, I'm pushing Convergent. Okay, if you haven't signed up, go to cttraders.com or convergenttrading.com and put in your email so you can be notified. Good luck.